The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Look, I'm taking my guests to the smaller end of town, but in a very hot sector. Catalyst Metals today hit a lifetime high after saying that its peer, Kaiser Reef, will buy the company's Henty mine in Tasmania. The transaction terms include 15 million Aussie dollars in cash. So Bell Potter says that the company's plans to sell Henty Gold makes sense as it simplifies the business. And Bell Potter, for one, has upgraded Catalyst to a buy with a price target of $5.50. It says the divestment enables Catalyst to greater focus on the expansion and exploration of its flagship plutonic operation. Adds that the mine sale also adds low costs and rapid option to unlock value, at its Bendigo project. But this is a company that we've discussed on this program before. It has had an absolutely stellar, run since we've seen the gold price continue to go hard. So I'd like to get a thought on Catalyst Metals from you, Francesco, to start.
I like the lifetime high term. Is a new one for me anyway. Look, I don't know much about this stock. I think the share price has run pretty hard, obviously. It wasn't just on the sale of the Tasmania mine. They also announced that they've extended the mineralisation in a tenement they have in WA called Trident. I dare say that they're trying to offload some assets to utilise the funds to expand in some of their other operations. The Bell's analyst looks at the plutonic operation, but there's also that Trident one. I don't know enough on this stock to say that at this price it's good value. I would suggest that as it runs hard, the value strips out of it. At odds, we don't cover it. So, but I will give you our preferred is Vault, which is previously Red 5. That's our preferred gold miner, or Newmont.
Got it. If you were in Catalyst, just looking at that chart, would you be trimming?
Again, I don't know enough about the valuation, but look, when a stock runs that hard, and if you've got some really good gains, sometimes it's nice just to take a little bit off the table. And I would generally be advising clients on that side of things, but I'd need to understand a little bit more about the underlying assets and the other assets that they're hanging on to. But when a stock runs like that, at some point it's got to come to an end.
Yeah. Okay, but Volt is your pick in the space. Rudy?
It's not widely covered. It's even after this one, it's only $1 billion, I think, market cap. I think there's two things to point out here. One is it's not widely covered, but if you believe that the gold price is heading for more rises, the obvious observation which is being made by analyst after analyst who looks at that sector is that those prospects are not yet priced in the sector, in the gold miners sector. So if you're a gold bug, or you simply believe that gold will go higher from here, then the assumption is that a lot of those gold miners should actually have a higher gold price, because I actually saw a report by one of the analysts, I forgot which one exactly it is, predicting that the next round of analysts will all see upgrades to forecasts, because they all are working off a lower gold price. So the sector is basically cum upgrades. Having said so, I'm also not that familiar with Catalyst. I mean, there are so many more gold stocks that are larger cap and better known and all of that. But the alternative story is also that you don't have to be in gold miners, because you do take on board the individual risk of the gold company itself. And those who have been very loyal shareholders in St. Barbara, for example, they know exactly what I'm talking about. Down 30% one day, up 30% the other day. So I'm personally, for example, I own gold, but no gold miners.
You own the ETF?
And I have an ETF in gold, and I've been doing quite well in the post-GFC era. I think every portfolio should have gold. Whether you go for gold miners is a potentially higher reward, but also a higher risk. It works the other way as well.
And the smaller ones generally operate on a higher cost base.
Also.
So as the gold price goes up, their margins actually go at a
Well,
greater rate.
except for
Yes.
Catalyst is unhedged,
Yeah.
so they've been
Yes,
able
exactly.
to.
Exactly.
So on the flip side, though, when gold
Yeah.
price does come down, the lower cost producers don't fall as
Yes.
much.
Yeah,
Yes.
yeah. All right, so we'll just say a hold, or no, we're just.
I'd
gonna
take
say-
a bit off the top.
Yeah,
I'd
we're going to
like a
say
bit of it.
trimming.
I'm happy in gold. I
Yeah.
recently increased my allocation a little bit, so.
So I'm going to call that a hold for you. Happy? Happy?
Yes.
All right, that's the stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.